KVB PRIME, developed for global traders, growing together with you.
Welcome to KVB Prime Weekly Market Commentary. This week, our topic is, where are US-China relations heading to? Over the past week, US has reported depressed economic figures, including retail sales, industrial production, and job opening fell. Market increasingly concerned about the negative interest rates, and US President Trump also urged the Federal Reserve to adopt it. However, the Federal Reserve chairman dismissed the possibility and announced further quantitative easing on last Tuesday. The Fed also expressed concern about a second wave of coronavirus outbreak, which poses a serious threat to the economy. Thus, US dollar index went down by 0.61% on weekly basis. Besides, US-China relations has been a hot topic. China even warned that some in the US were pushing the countries toward a new Cold War. The market will keep paying attention to the response from both Beijing and Washington this week, as the rising tension between the world's two largest economies may become a headwind for the stock market. According to the UK ONS, data show that the country's core CPI rose 2.1% in April, although it was still slightly below economics forecast of 2.2%, but it means the end of a 3 months of dismal inflation below 2%. The central bank expected the inflation rate to remain well below its 2% target in August, and core inflation rate to be at 1.8%. So interest rate will be on hold as well. ABS latest data show that Australian retail sales were 24.73 billion Australian dollar in April, down 17.9% month on month, recorded the largest monthly decline, and the decline rate was 2 times more than March. In addition, the monthly decline in household spending was even larger than the 10.6% decline seen when the sales tax was introduced in July 2000. Eurozone PMI rose to 13.5 in May, from 13.6 in April. Eurozone PMI rose to 30.5 in May, from 13.6 in April, higher than expected 27. Economics predict that the second quarter GDP may drop at a high rate, with a 10% decline. Germany, as Europe's largest economy, saw an improvement in private sectors in May because restrictions lifted. Germany's PMI for manufacturing rose to 36.8 from 34.5 in April. Similarly, France's business slumped east in May, as the lockdown restrictions were lifted earlier this month. Data from IHS Markit indicate that its service PMI rose to 29.4 from March 10.2, higher than the predicted 27.9. Meanwhile, the manufacturing PMI increased to 40.3 from 31.5, also exceed the expectation of 36. Japan's GDP fell by 0.9 in the first quarter and shrank by 3.4% on an annual rate basis. It fell for 2 consecutive quarters. In April, Japan's core CPI, excluding fresh food, fell by 0.2% to 101.6 from a year earlier. This is the first year-on-year decline in the index since December 2016. Indicating the deflationary pressure in Japan has increased further. At the same time, data show that in April, gasoline price in Japan fell by 9.6% year-on-year. Electricity and gas price also fell to varying degrees. Further, business travel has plummeted due to the spread of COVID-19. The price of overseas travel in that month fell by 11.7% year-on-year, and domestic accommodation prices in Japan fell by 7.7%. Subsequent declines in international crude oil prices will continue, and Japan's core CPI may continue to decline in May as well. Now, let's look at the weekly highlights for major currency. US dollar index fell 0.61%. The euro went up 0.76%. The pound went up 0.53%. Australian dollar went up 1.88%. Gold price fell 0.49%. WTI gained 14.41%. Brent gained 10.68%. The Dow Jones and SP 500 rose 3.64% and 3.55% respectively. Now let's look at the major asset intraday analysis. US dollar index continue. Now let's look at the major asset analysis. US dollar index continue its previous adjustment with the triangle pattern. After rebounding from the recent lower support 99, the continuous positive lines in intraday dominates the fourth boost within the boundary. Traders need to pay attention to whether US dollar index can break through the resistance 100.6 and jump out of the boundary under the leadership of the longs last week. At the same time, it should also be noted that once the support 99.4 is broken through, it may break the triangle patterns to the previous low level 98.6. This week should closely watch the breakthrough trend in the boundary. Different from the US dollar index, last week, the euro successfully broke through the triangle patterns in our previous analysis. Under the competition between the longs and the shorts, it formed a rectangular volatile boundary with the trend from last 2 weeks. The new resistance 1.0987 has not been able to break through in the past 2 weeks. The support is adjusted to the lower 1.0772. The previously predicted second resistance and support are still working. If the euro does not fall significantly in the next 2 days to return the first support, it may raise by breaking the triangle and return to 1.1 to challenge the higher resistance. As we predicted last week, although the pound has not returned it to 1.2340, it has not fallen below 1.2073. The shorts are still dominating. In terms of resistance, the rebound trend of the pound this week is not obvious. The support 1.2270 within the M shape will become the first resistance this week, and the second resistance will follow last week's resistance. This week's focus will be on the extent of the decline of the pound, whether it is slightly oscillating around 1.2073 or increased momentum to target the lowest in the past 2 months. Both will provide trading opportunities to shorts. Gold's performance from last week was unsatisfactory, not only because it failed to reach 1,760, but fell below the predicted support 1,723 last week. However, looking at the recent trend, the longs of gold has not been stable and have maintained a continual positive lines many times in the early stage. It is well prepared for a rebound and it is still in the ascending channel. This week, if gold can maintain stabilities above 1,717, longs are expected. If it can rebound directly and break through the first resistance 1,754, then the next target will be 1,770. Otherwise, if this week continue to fall, once it falls below the support 1,717, gold will jump out of the ascending channel, and it's difficult to return to the previous height in short term. Thank you.